welcome to this edition of Closing Trades. We're coming to you live from the ET Motilal Oswal studios, and a much stable day, one would say, especially given the context of how yesterday or the days in the past have turned out to be. We've largely consolidated around that 25,000, 22,580 odd level. I wish it was 25,000, right? But yeah, the futures as well, a lot more sedate there. 22,600 is what we've managed to cling on to for the Nifty futures for the better part of today's trading session. Let's just take stock of what's been happening within the Nifty and how is it that we've been panning out when it comes to the large cap universe. Today, of course, the heavy lifting has been done by M&M solely. That stock holding higher by nearly 3%. Bharti has been a standout performer, a good solid 2.5% of a move coming in. There's a Bajaj Finance, Nestle ITC as well have done out quite well, and Maruti also continues to see green from yesterday. What's not performing well continues to be metals, pharmaceuticals, IT, all those tariff uncertainty areas. They're the ones which continue to get clobbered, and Trent as well over there, 49.76 on that stock as we speak right now. L&T, Asian Paints, Reliance, SBI, no support from these counters as well. A lot better, one would say, for the broader market, while yes, the breath has switched over in the negative, but time and again we've managed to flicker in and out of the red to the green. Sun TV holding out well, Chambal Fertilizers is looking good, Laurus Labs, Max Healthcare. These are some dots of green in the markets right now. But let's welcome on board Naresh. We've got Dhananjay Sinha and Kunal Bothra as well joining in. Naresh, hi, afternoon. Let me come to you. What is today's consolidation telling you? Are we gearing up for a move forward at all?
So at least a pause is the first decent indication because we've not seen any volatility today in any of the indices. We are flat across the board. So let us see if we see further price action. So watching out 22,800 now becomes that pivot point. If we sustain above that, we get into a reversal.
Right, so that's the talk about what the markets are doing at this point in time. Kunal, let me come to you and let's talk about metal sector, because given the fact that this one is one of the top sectoral losers in trade today, and one of the reasons why that this sector is under pressure is the fact that the US is another salvo coming in on China, and the fact that them talking about curbing investment in Chinese companies, and that's not boding well for the entire metal pack as well. But what's your take coming in the metals? How should one actually play this theme, and if at all one should actually play this theme?
I think there should be a decent merit of playing this on the long side with a long bias. Now, for example, many of the stocks like JSW Steel, Tata Steel, then you have Hindalco, Jindal Steel and Sale. I think many of these stocks which have been more formidable in the recent last 2-3 weeks approximately. What has happened is that many of these stocks have upped their support, and they've moved up higher by a margin of 10%. I think Tata Steel is up some 20% from its recent swing lows around the 110 mark to 135, 140 plus levels, where the stock has been trading right now. So which means that what we are looking, is that these stocks have managed to digest a lot of negative news flow and then managed to move up higher slowly and gradually. Now on the way up also, I think it's not going to be an easy task or a vertical rise for these names. But then eventually, I think there comes a point where the risk reward starts to look very attractive, because you know that the slew of news flow is not leading to any major negative price action for these stocks. And then when we look at the relative strength scale, we look at the last, I think 10-15 days of time frame for the index with respect to the relative sector strength. Metal stocks have done reasonably well, and they still stand out to be one of the top performers in terms of the relative strength scale. So I think on all of these aspects and the individual stocks, make sense to hold on to these metal names as well as look out for buy on dips.
Dhananjay, hi, afternoon. What is your reading on the market? Beginning to nibble into large caps just yet? And what is it that you're doing with small and mid caps? Steer clear, is that the advice?
I mean, there are a lot of negatives that has been playing out, be it the dollar index, which was strengthening the US protectionism and whatever sanction is trying to impose on various countries, etc. I think that has created a kind of a upheaval in the markets, and also our results hadn't been too heartening. So I think all these things have translated into a significant erosion in market capitalization. I would say roughly about 78 lakh crores worth of 78 lakh crores worth of market cap erosion has happened if you look at the overall. I think, in terms of valuation, the market appears to be, at least the benchmark indices appear to be, trending towards more sane levels. So if you look at Nifty, it's about 20 times. So does look to be lower than last 10-year average or thereabout. So I think the market is trying to look at some value pick at this juncture. I think it is very tentative because there can be a second order impact of the losses that has happened, especially in terms of the retail flows, the impact of that on the collateral values of various bank exposure that may or lender exposure that may be happening. So I think we need to be careful about it rather than every day there can be some change in momentum. But I would say it would take about 3 to 4 months time before things get clearer in terms of global factors and domestic earning cycles. So I think all those things will need to be seen. I think RBI has cut rates, government has cut income tax, etc. Our view is that these are very small stimulus. I think those will not be very meaningful in terms of revival in the overall growth story. So I would think more of that will happen. So I think it will take about, in total, in nutshell, I would say about 3 or 4 months time before things get clearer. In the meanwhile, I would say there are certain stocks and sectors that are actually resilient. I would say large caps are generally better. And I think what is happening also is that within the banking sector is outperforming. That's largely because, I mean, ironically, that has become a defensive sector because it has not really, a lot of these heavyweights have not performed in the last 5 years. Hence, the valuations are very low and people think that's a hiding place. I mean, earlier on, FMCG and all IT, etc., was seen as defensive. We have seen significant battering there. Likewise, in metals, I would say metal is heavily cyclical, whereas people that has actually outperformed. So I think people are looking for a more resilient sort of sectors or stocks, etc. I would say that I would still be careful and be very careful about which stock that one can actually pick up. So I would say if I look at beyond 3 months' time, I think more and more stimulus will be available from domestic stories. It would impact more consumption, rural-oriented stimulus might come. I think these are things that we are sort of imagining over the next 6 to 12 months' time, on which government might actually act, and RBI may also act more aggressively. So I think I'll pick up value in such sectors, in consumption, in autos, and related sectors is what I think can be looked at.
Right. Dhananjay, good afternoon. Cheryl also joining in the conversation. And you did mention there are a lot of sectors that look good. There are a lot of sectors that may not look good, given the fact that you need to be very picky and choosy in this sort of a market. Large caps looks very attractive. But there are a lot of people on the sidelines who are very much risk takers. Do you think it's time to be risky? Look at the SMIDs, given the fact that there has been a sizable correction, and now you would feel a bit, greedy, and you would feel that entire space looks very enticing.
Yeah, so the thing is, I would say that the uncertainty factors are still looming large, and I would say it will be a little hasty to really jump in right away because things are evolving, and as I said, it will take about 3 to 4 months time to see things settle down. And if you look at the sensitivity of the benchmark index with the SMID index, I think that or a SMID sector has an elasticity of almost like 2 times. So if there is a 10% correction in the index, benchmark index, is 20% correction in the small cap. I think the important thing for the SMID sector is the flow and the retail participation. If you look at it, the kind of erosion that has happened, let's say that's about 78 lakh crores, that's almost like 30% of household income. And if I look at really guys who are actually exposed to the mid and small cap, those will be even smaller. So the concern that I have is that if there is a sort of a negative return for a sustainable period, the flows might actually start to diminish. So I think that makes the sector far more vulnerable. So, of course, if there is a big correction that has happened, very adverse sentiment that is there, you can have few days of rebound as well. And there are a lot of stocks that have corrected a lot. There can be some temporary rebound. But I would say we need to be very careful. I would say over here also we are finding some pockets where there are resilience in terms of stocks and stuff. So we need to be choosy there. But by and large, I would say I would not really go whole hog in this space.
Interesting. Okay, let's look at some of the other movers then today. M&M, of course, is the one which is sort of leading the pack right now. There's Maruti as well, which has been seeing some buying. Taranjay, a lot of time has passed since that slowdown in the monthly sales data for Motown translated, right? We all know the EV strategy, the global exposure, which most of these PVs at least have. Wanted to understand where is it that you think there is, merit in buying afresh or adding to the existing positions within the passenger vehicle makers? Because, I think the market has given its clear verdict wherein M&M is taking the top slot and Tata Motors is pretty much out of favor.
Yeah. So I think what we have seen in the passenger vehicle segment is that over the last, I would say, 3 or 4 years, there has been a significant premiumization driven margin expansion that has happened. I think the EBITDA margins for several passenger vehicle companies are at a all-time high or near all-time high. There is some shrinkage that has happened, but they're near all-time high. So I think going forward, why some of these names are losing interest is because the premiumization story may have actually gone off. I think that has peaked out, and as a result of that, the multiple expansion that was happening because of the higher average price of the vehicles sold, the expansion that had happened almost like 150 to 200% increase in the average sales price was happening when you moved from the entry level cars to the SUV level cars. That was one. There was huge amount of inflow of credit that was also happening, and I think the loan to value ratio was also rising. So multiple things were adding on in terms of the margin expansion and the operating leverage that is actually peaking out. So I would say the average selling price for the premium vehicles might actually come off, because if you look at the urban sector, there has been a slackening in terms of the overall salary growth. If you look at the compensation and salary of the non-finance companies, if you look at, I just looked at the data a little while ago, it has come down to about 2 or 3%. So there is a considerable amount of slowdown that has happened there, and I would say the credit side could also tighten. So I would say, hence, the premiumization part might actually take a hit, especially for companies such as M&M, which has got a very high end kind of vehicles. I mean, of course, the tractor is attractive, but tractor component is attractive, but the SUV part, but actually you see a certain amount of slackening. Hyundai Motors, for instance, also has a very high premium segment. I would say Maruti is somewhat better because it has got still about 60% market share in the entry level cars, and the stock hasn't done much in terms of performance. So I think that stock looks to be better. So basically, the other aspect to really look at is the reduction in the steel prices that has been happening, and we've seen margin expansion happening on the cost from the cost side in the third quarter results as well. So I think it could pan out as we go forward. So I think Maruti definitely looks better, I would say, relative to other passenger vehicles. And of course, I like two-wheelers because you have a sort of an income tax rebate that's been given, so there might be some leverage that can happen because of that, and also that next year you will have a pay commission, which can actually add to the sort of demand for the government employees. So I think over there also I would say something like a uh, uh, Bajaj Auto or Maruti, TVS, those kind of stuff can actually do better. So I think I'm closely looking at the premiumization story, the cost aspect, the leverage aspect, and the income effects that can happen from the tax break and also the pay commission thing that would happen next year.
Premiumization has to be a key theme when you talk about it, when you actually step into H2 of 2025 in particular. But on that note, we slip into a break on this edition of Closing Trades. A lot more about markets on the other side. Don't go anywhere. Welcome back. You're watching Closing Trades right here on ET Now. We're coming live to you from ET Now, Motilal Oswal studio. And if you look at the markets, they're doing absolutely nothing, trading flat with the positive bias. With the Nifty Bank in the negative territory, the advanced decline ratio from morning has tilted a tad bit in the favor of the declines. But Kunal, looks like today is a day that you cannot complain given the fact the way how the markets have moved, and no move is a good news sort of a thing for the markets right now.
Yeah, sideways is a good day for the markets, especially with the kind of carnage we've already seen the last many days, many weeks for the indices. But that still doesn't indicate or infer that the markets have come out of their selling spree and we are looking at an immediate revival. In fact, today also, even with the indices being absolutely sideways, we've not been able to break past about even the yesterday's high for the Nifty on the spot level. So I believe that this could just about be the adjustments, the volatility or the rollover positions which generally happen due to the expiry. But if we break past about a series of maybe 1 or 2 days of swing high resistances, that's where we can establish that the market mood is getting a lot more better. Also, I think today we have not seen any major comeback from large cap names either in terms of sectors also. So that's another reason why you're seeing the market activity a lot more dull than what it was maybe last couple of weeks.
Bunch of other names which are in focus. For Bharti, of course, there's been a note from Goldman Sachs. They've maintained a buy with the target price, which is indicating a 5% upside. 1780 is the target price that they've set on this one. Bharti, of course, is partnered now with Ericsson 5G core technology to drive their 5G evolution forward. There's 361 WAM, that stock holding up very smartly. Citi has maintained a buy with a target price of 1275. They're expecting that equity broking is going to grow at 15 to 20% over the next 2 to 3 years, and they've retained their net recurring flow guidance at about 35,000 to 40,000 crore rupees. Dhananjay, you think the entire capital market theme, which has worked very well the past 2 years, will it continue to do so after this recent bout of correction in equities?
So I think this is a structural story. I would say, you might have a sort of a correction that has been there, but I think this whole the market-oriented stocks are actually doing reasonably well with higher financialization and retail participation that's been there. So you might have bouts of market going up and down, but I think by and large, I would say the participation of the financialization of the rural of retail investors in the market. I think that's a story that can continue. So I think. That is a kind of a structural story that I would bet for.
Right, so that's the take coming in from Dhananjay on that note. Thank you so much, Dhananjay, for joining us on ET Now to talk about the sectors that are looking attractive, be it the large caps or the SMIDs, and also giving us an extensive view when you talk about the metal space. But on that note, we slip into a break on this edition of Closing Trades with the markets trading absolutely flat as we speak. Let's wait and watch out what happens in the next 30 minutes of the trade.
Well, still holding on, still quiet, so at least the selling has abated. That in itself is a big relief. So while Bharti, M&M, Bajaj Finance, ITC are all holding out well, ICICI Bank as well has circled back into the green. It's flat for HDFC Bank. Still under pressure though for metals, for some of the pharma names. Technology hasn't been able to resurrect. And oil and gas as well is weighing heavy on the markets right now. Sunil Subramaniam too joins in on the show with his thoughts on the market. Sunil, hi, afternoon. Does it seem like the selling is going to abate? I mean, looking at yesterday's FISL figure, that of 6,000 crores, seems like there could be some more pain in store for us.
Well, I think while some more pain from the FIS may be there, I think domestic buying is going to step up. I think over the last month or so, it's not just been FIS selling, and I think domestic fund managers who've been booking profits in mid and small cap have been raising amounts of cash. And I think today it's more than 200,000 crores of cash. So I think that is starting to get deployed. But naturally, it's going to the quality names, it's going to the larger cap first, because obviously they also want to protect the downside. Because honestly, clarity on earnings season, earnings on the international front are likely only from April. So from now on, I think it's the domestic fund managers who step in because they're sitting on a lot of cash, picking those stocks where there's downside risk is less in terms of any untoward earnings or split, and also the whole reciprocal tariff and that scenario where they don't want any negative surprises. So I think selective buying, because overall, if you see Nifty on a 5-year average, it's now below its 5-year average on valuations. So it's no longer right to say India is very, very expensive. We are now closer to our long-term average, and I think interesting buying points emerge. I would still expect, just to reiterate, that to come from the DIIs rather than the FIIs. FIIs, there's still more clarity around the international scenario to come through, and they would probably wait for our Indian earnings season to take a call on specific companies and sectors.
So, Sunil, where is it that you're seeing those buying points with stocks?
Well, for me, it's clearly private sector banks are the ones which there's valuation comfort. There's, I think, a good market share for them, good growth prospects, and they haven't run up or they haven't fallen anywhere close to the market. So I think even if you look at over a 3-year perspective, private banks haven't really given that kind of return. So I think it represents a fairly sweeter spot from a valuation perspective. And I don't think there's real concerns around the quality of the management or anything. So larger private sector banks are my number one pick. Second, I would also be very interested to look at the whole cap good space, because a lot of the correction has happened there. Now, it's going to be difficult to predict which company. So I would probably say diversify across some cap goods, because I think the medium store of India is still going to be around a revival of private capex sometime. And hence those capital goods going through a V-shaped kind of order book and growth. So I think a little bit longer in the horizon, but if those corrections have happened significantly, which I think they have, I think selective buying on the capital goods, infra, building materials, those kind of infra supporting segments, I think will start to happen. So these would be at the two extreme ends, a safety pick from the private bank side and a slightly riskier, but with a longer term call on the capital goods space.
All right, so that's the take coming in on private sector banks, and who doesn't love private sector banks at this point in time? But Kunal, in your closing trades, are you liking that space?
No, in fact, I'm going short on the IT stocks, and especially the mid-cap IT names. Persistent Systems is something which has started to look a lot more negative. The stock is on the verge of a break below its previous supports, and we've seen that how the Nifty IT index had opened with a gap down yesterday and then seen a follow through on the downside, at least many of the names. So would be looking out for a sell on Persistent Systems.
All right, so it's a sell coming in for Persistent Systems. Naresh, what about you? What's your closing trade pick?
So looking at a buy on Colgate, the stock has corrected sharply over the last few months. Looking at it as a bounce back candidate towards 2600, stop loss at 2500.
All right, so those are the closing trade picks coming in from our experts. Sunil, I just stepped out in the afternoon and the only song that I could think about is from the Merry Men saying, feeling hot, 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 given the fact that even the IMD has given an alert for a heat wave in Mumbai. We are already close to touching 40 degrees centigrades in Mumbai right now, and it's not even March. We've not even hit the peak of the summer season. I wanted to understand, do you think that given the fact the the weathers are changing, the patterns are changing, do you think that now is the time that you look at all of these counters which cater to the segment, be it a Blue Star or the Voltas or the Havels of the world?
I agree with you. I think the hotter the summer, the cooler the product range that will get sold. So right from air coolers to water coolers to air conditioners, refrigerators. And I think there's this 100,000 crore giveaway we talked about in the budget, right? Where's that going to be seen? It's going to be seen in EMI-driven product sales. That's consumer discretionary, consumer durables. Everybody buys it on a zero-cost EMI or whatever, right? And that's where the extra rupee is likely to go. So I think, and rural demand is the one which is holding up, right? Because of the very good Kharif and Rabi crops. I think that's clearly outpacing urban demand. And in the rural, the penetration of these products, see, the richer farmers are obviously now looking at the quality of life and doing these things. So I think that you could see a boost from the rural side also on the consumer durable names. And I think the hotter the summer, the better. You're talking to a Chennai Vasi. For us, heat is always present. So not to worry.
Absolutely. Well, today, of course, it's Nestle. They've already upped their, product prices in lieu of, commodity prices also going up. So that stock is holding out. They're considering rather price hikes across their products. There's also Zomato, which is holding out well. So, maybe a heat effect. You don't want to go out, so order in. Zomato, Bernstein stock pick, and they're indicating a good 35% upside actually from the current market price. A target of about 310 is what they've put on this one. Although their peg is more Blinkit, that's the bigger play, as has been the case. They think that Blinkit is going to remain the leader, driven by early mover advantage and strong execution. But the upside, they think, is going to translate into stronger growth profile, which is a good 70% on a year-on-year basis. That's Zomato today, also holding up almost 1.5% as we speak. But Sunil, now that it's going to be a nifty entrant soon, you think Zomato at 225 is still a buy?
Well, I don't want to talk stock specific, so excuse me on that. But I do think that the quick commerce space is a good buy. So without talking specifically on the stock, I think overall the quick commerce space is definitely something that would also benefit from this budget tax giveaway, I suspect, and the hotter summer is going to help.
Right. Naresh, have you seen the charts of Zomato of late, and how do you think these values are pretty attractive for Zomato? Because everyone has been waiting for this sort of a correction to creep in. Everyone is touting the fact that 220 would be a good zone to enter into the stock. Do you think it still holds?
So I would expect it to be more sideways for the near term. The last major support for the stock was at 240. It broke below those levels. The last two attempts, it has been failing around the 240 mark. On the downside, 205, 210 is the support. So I would expect this range to continue for some more time between 200 to 240.
That's the take coming in on Zomato. Bunch of other names which are also holding out well. Look at Interglobe Aviation. There's a City note on the stock wherein they're maintaining a buy with a target price of 5,200. Not much of an upscale really from the earlier target price, but they've opened a 90-day positive catalyst watch as well. Sunil, what's the best way to actually cash in on the entire, traveling India theme? Is it via hospitality? Is it via QSR? Is it via aviation companies? What do you think is best suited as a play?
I would say all of the above. And the best is to do it for a good consumption fund. A good consumption fund would be investing across all of these themes. And I think that everything is going to benefit from this. See, I expect that when the GDP per capita data get published for this year, we will probably be touching $3,000. And that's a huge boost up from the fact that we were at 2,100 at COVID levels, right? So if you look at India's GDP, about 356 lakh crore, I think is what we are projecting for this year. And look at the population, we should be close to that $3,000 per capita. And so these kind of products, all of these are going to benefit. So where do you want to put your hat on any one of them? Buy the whole pack, because even within, see, the toughest part here is picking the winner in a segment. So the right way to go is to diversify across the top three players in each of these, in hospitality, in airline, in consumer discretionary, all of them. So I think doing a good consumption fund, and there are enough of them in the mutual fund space today, right, which has got a good spread across these, right, and diversifying it, I think is the best way to play this, because you will definitely benefit from the growth. 1 year, one guy will be a winner, another guy will gain market share, but you just ride along for the party.
Right. And actually, in association with all of the theme that you actually spoke about, Sunil, given the fact that tomorrow is the last day of Mahakumbh, and we touted that the fact that it is going to add to the GDP growth of the economy, at least the numbers that we will see for this quarter will be good and will be actually pumped up on thanks to the way how the tourism has been, how the hospitality sector has been, the amount of trains that we've added, the flights that we've added, also the stay. But I wanted to understand, do you think that stocks that are involved in all of this, and I'm talking about maybe an Exigo or Make My Trip or Yatra for the matter of fact, you think it's just a one-time wonder coming in for these counters?
I think it's be a re-rating, because you see, what this has done is also given a boost to the whole travel philosophy. So, it was not just about the Kumbh, right? It was about the triangle, right? It was about Varanasi, it was about Ayodhya, and about this. So I think you may call it spiritual tourism, whatever, but I think it shows the amount of time that people now are willing to allocate to this. So it's a larger move, and I would expect it's a one-off, huge jump will be there, but there is also going to be a re-rating of the change in the mentality. Why I'm saying this is you put yourself back a couple of months ago. Did you expect the Mahakumbh to be such a big success? Did you expect everybody to want to go there, pay ridiculous airfares, ridiculous things to do? And did you expect it to be so organized? I think it's given a huge confidence to the Indian domestic traveler. First, we've I think tapped into a latent desire now to go and travel, and spiritual tourism and other tourism. I think it's opened up the eyes of the middle class that within India you have good quality travel, good quality stay, and all of that possible. So I think it will lead to a larger level of people now wanting to go to various temple destinations across the country to plan a holiday around that. So I think it deserves a re-rating from that perspective, to my mind. You have to take off the one-off effect of the Mahakumbh from their current earnings whenever they report that. Obviously, you can't project that for the future, but definitely from the past, a re-rating is deserved, I think.
Okay, let's switch focus from the Mahakumbh and let's talk about what's happening within the market regulator SEBI. They've issued a new consultation paper through which they aim to have lesser stocks entering the F&O ban period. The consultation paper recommends a change in the way open interest is going to be calculated for the individual scripts. Ankur Mishra, my colleague, is here with the details on the consultation paper.
Yes, market regulator SEBI has now suggested that a new calculation should be there for F&O ban. Currently, as far as the stocks are concerned, there are quite a number of stocks come in F&O ban, and the idea is to reduce it by 90% if at all new methodology is adopted. Now, what is the new methodology? Currently, the calculation is based on notional basis, whereby SEBI has now suggested that if we move from notional basis to delta basis, which has been suggested in the discussion paper, the number of stocks which are coming in F&O ban can reduce by 90%. Now, what happens sometimes artificially based on these calculations, the stock reaches 95% of market-wide position and it comes in F&O ban, whereby only you can settle your position but cannot take a new position in F&O. But if this new methodology which has been suggested in the discussion paper is adopted, that could reduce significantly, and that could also help the retail investors or the market participants in the whole. And that is why SEBI is proposing that strict eligibility criteria for derivatives on non-benchmark indices requiring at least 14 constituents, which has been suggested in the discussion paper. All in all, the views are therefore asked from the market participants, and we can see a final rule coming in from SEBI very soon.
All right, thank you so much for that, Ankur, for getting us all of those details. But let's talk about the IPO market, given the fact that it's been a buzz. And in the year 2025, a lot of bets have been off the table when you talk about IPO market, saying that maybe the market valuation is not that great. Will we see that many IPOs that we saw in the year 2024? But today we got a very big news saying that Tata Capital, which is a part of Tata Group, they're planning to go for an initial public offering that will include a mix of new shares and an offer of sale by some existing shareholders. Remember that if you've seen through the course of the day, or you're seeing on the bottom of your screen, you have Tata Investment that has seen a big up move on back of that news. Gaurav is here with all the details. And Gaurav, tell us what exactly does it mean for the group, for Tata Capital, especially Tata Investments as well?
Well, yes. Tata Group of companies once again making a headline, and the reason being that Tata Capital is coming up with their IPO. They have approved the IPO, including the sale of around 23 crore shares via new issue, and they have also approved the offering of up to 1,500 crores worth of shares via right issue. Let's not forget that news articles earlier speculated that the entire IPO size could be somewhere around 15,000 crore rupees. Now let's talk about the company. Tata Capital is a subsidiary of Tata Sons, and it is an NBFC which provides a range of services, including the distribution of Tata cards. It currently have around 5.2 million customers and across 900 branches. When we look at listing in September 2022, regulators actually classified Tata Capital as upper layer systematically important NBFC, and that is the reason they required Tata Capital to get listed in the next 3 years, which comes to around September 2025, and that is the reason why the speculation is rising once again, and now the board have also approved the IPO. Now, when we look at financials, we already know that loan book currently stands at around 1.8 lakh crore rupees, and at the same time, when we look at gross NPAs, it is also at a healthy level of around 1.5% for the company. Company reported profits of around 1900 crore rupees in first half of FY25, and lastly, when we look at ROAs, it reported around 2.25% of ROAs and 16.5% of ROAs. So again, a very good performance set by the company. When we look at shareholding pattern, Tata Sons currently holds around 92%, while Tata Group of Companies currently holds around 2.5% stake. Let's also not forget that company regularly have access on needed base capital support from Tata Sons, because in the last 6 years itself, company has received around 6,000 crore rupees from Tata Sons, including 2,000 crore rupees that they have received in FY24 itself. Let's also not forget that on the back of this news, Tata Investments is also in focus today, because Tata Capital is around 4.7% of the overall investments of Tata Investment, and that is the reason why this stock is also up in trade today. So on the back of the news of the recent IPO, we will be definitely watching out on what happens in the Tata Group of Companies in coming days.
That's quite interesting. Tata Capital looking to go for an IPO and as sizable as 15,000 crore rupees. In the meantime, let's just address what else has been happening in the market right now. We're closing in pretty quiet for the day, and that's okay. Flat is something that we can definitely welcome, although we are off from the day's top. But we're still managing to at least latch on to that 22,500 print for the Nifty spot. But here's Jim Rogers. We spoke with him earlier today, and he says that he's actually going to be selling out of US equities and that he's bullish on Indian equities and macros after the recent fall.
I am optimistic about India. I am optimistic about the Indian markets. I'm even optimistic about Delhi for the first time in my life. But in my view, it is time to put money into India the next time it's depressed. I will certainly take my daughters to India. Everybody needs to see what's happening in India because it is a dramatic change, in my view. And I would like to introduce my daughters to the Indian stock market because, in my view, in their lifetime, India is going to be even more important than it has been in the past. And I will try to teach them about silver.
All right, so that's the take coming in from Jim Rogers. Let's take a look at what the markets are doing at this point in time. Pretty flattish move coming in for our benchmark indices. You have the US futures that are pointing to a negative start as of now, but yeah, it's initial moments of the pre-open trade coming in for the US futures. So yes, negative trade coming in for that particular set. You also have Bitcoin that has seen a big slump, so that's also adding to the pressure to some of these counters in the that are listed in the US bourses. Talking about some of the stocks that are on the radar today for all of us, yes, metal counters, they're falling on the worries that US curbs on China coming in. You also have Adani Energy. That's a counter that will be in focus because Elara Capital has initiated coverage on the counter with a buy rating. Bharti Airtel is gaining because you have Goldman Sachs that has gone ahead and hiked the target price, as well as Zomato. That one has been a hot favorite, a hot topic of discussion for the last 3 odd years, where the stock has seen a rapid rise. Today also is seeing a good up move. You have Bernstein that's still seeing an upside for the counter despite rising competition. So these are some of the counters we're watching out for very closely in a trade today. But Kunal, which is a stock, or which are the stocks that one should watch out for when you talk about BTST ideas?
So I'll go with 2 buy calls, and both of them are from the mid-cap arena. So the first one is on Amara Raja Energy and Mobility. It's a very interesting chart. The stock in the last couple of days has shown a very good volume pickup, good price action, swing breakout, which you've seen today. And assuming if the stock closes above this 1,045 to 50 odd mark, this could also confirm a swing breakout on the closing basis. So look out for targets in the range of 1,085. Stop loss could be kept at 1,020. And the second would be about Devyani International, an excellent chart over the short to medium term. The stock is nearing a break of its previous major highs, about the 180 plus levels, as well as a swing of resistances. 200 moving average breakout also potentially very near for the stock. So would look out for targets in the range of 190, suggesting a buy with a stop loss at 167.
Right. Naresh, what about your strategies?
So first would be a bounce back trade on Colgate, which has seen a very large correction. Stop loss at 2,500, target price of 2,580. Second is a buy on About India, which has come close to making a new 52-week high. Stop loss at 29,900, target price of 21,000.
All right, so those are some of the BTST ideas coming in from our experts. Let me get closing comments from you, Sunil. Given the fact that we are going to go on a one-day break, I'm sure that all of them will be relieved given the fact that there is a one-day break, midweek holidays, who doesn't love it? But come Thursday, you wouldn't know what you have to face, given the fact that if you are shut shop for the weekend, when you come on Monday, you have a new piece that you have to react to. Right now, as we talk, markets have slipped to the day's lowest point. What's your take? What should we watch out for, given the fact that it's been a volatile February for all of us?
So I think I don't think we should focus on domestic. All our eyes have to be abroad. I think what's developing from Trump's actions across the US, Russia, they voted against the UN resolution on Ukraine. It's a big surprise. So I think the uncertainty around Trump's actions and how far are these threats and how far these something he will follow through on, the market's going to keep guessing. And to the extent there is if any effect of that on India, either in terms of oil prices or tariffs or whatever, is going to affect our markets. So I think all of that is what I would keep my eyes open. I think domestic scenario is fine. I think April earnings numbers should come out good and recovery should happen. Domestic fundamentals have money, so they will buy good quality stocks when they see price correction. It's the international scenario that's still going to be heavy cloud weather over India. And so it's better to watch out those and the US data, of course. That's the key because interest rate cuts, dollar strength, and all of these are key aspects for FI investments into India.
Right. Okay. Interesting. Sunil, we'll let you go on that note. Good to have you on the show as always. We're going to, of course, wind up, for the day in just a short while from now. Tomorrow, of course, is the trading holiday on account of Mahashivratri. And then Thursday, you've got expiry. Kunal, what do we anticipate? Some more fireworks, some more weakness? Or do you think today's trend, which is that of at least the selling getting abated, is that going to persist and continue?
And the selling should continue for some more time because it doesn't look like that the data is indicating any kind of an unwinding. Had it been an unwinding kind of a move for the indices, even the last 2 days had the data indicated that the shorts are covering their positions on not just individual stocks which are going out of FNO, but for the overall market and especially for the indices, then we can anticipate a decent rally for the index. As of now, we are into that lull kind of a phase. The premiums have dropped down for the currencies, of course, because of the expiry effect, as well as going into the next series. I would expect the index to trade with a far lesser premium than what it has been in the last many months, and especially over the last 1.5 or year of average. So that also indicates that short positions are still intact into the index futures. What matters now for the index is in terms of levels and the flows reversing. So the first, of course, is the FII flows. Once they start to reverse, we may see a positive effect building onto our markets. And the second, the most important part is the important technical levels. For example, 22,800 mark, that becomes a major resistance point for the index. So if we scale past about those levels, say start of the March series, that's where I would expect a major short covering to come into play.
300 points away. Let's see. Fingers crossed on that one. But Kunal, Naresh, we'll let you guys go on that note as well. It's a goodbye from Cheryl and me, and I'm going to hand it over to Ashesha to walk us through the closing trades this afternoon.
Well, yes, soft day for Indian markets after the solid fall that we have seen in yesterday's trading session. Nifty ending near that 22,530 odd mark, 0.1% lower on the index level. Nifty Bank closing near that 48,600 odd mark. So a slight bit of sluggishness over here as well, 80 points lower. In terms of individual sectors, Nifty Metal Index was the biggest underperformer in today's trading session, down 1.5%. We had a whole host of metal stocks which were under pressure today, the likes of NALCO, National Aluminium, which was down 4.5%. We had Hindalco, Vedanta, Jindal Stainless, all of them declining anywhere between 2.5 to 4% in today's trade. Hindalco for you on your screens at 624, down 2.5%. Real estate stocks were also under pressure today. Nifty Realty Index was down nearly 1.5%. A whole host of stocks from this sector under pressure. Oberoi Realty, for instance, was down 2.5%. We had DLF and Mahindra Lifespaces. Oberoi Realty up there for you on your screens, 2.7% lower. DLF down 2.5%, and Mahindra Lifespaces was also falling in trade today, down nearly 2.5%. On the gaining side, though, we had a whole host of auto stocks which were gaining in trade today. M&M, remember the sharp fall that we've seen over the last few days. Today it did recover for the second day in a row. Nifty Auto down, up 0.3%. M&M was up 2%. We had Ashok Leyland, Maruti Suzuki and Bosch, which were also gaining in trade today. From the FMCG pack, we had a whole host of stocks. Colgate, for instance, was under pressure. It was down 2%. Nestle and GCPL were some of the other movers. Colgate there, up 2%. So a whole host of FMCG stocks were also gaining. Nestle, of course, on the back of that price hike announcement that came through, was gaining in trade today. In terms of individual movers, Bharti Airtel was up 2% on the back of Goldman Sachs report, where they are maintaining their buy. 1780 is the target price that they had given. So on the back of this report, Bharti Airtel 1642 is where it is ending the day. We had Zomato on the back of that Bernstein report that came in, very positive report, where they maintained their outperform stance on the top with a target price of 310. They believe Blinkit's expansion plans are very aggressive. Our outlook for the company continues to remain very strong. Zomato, it did give up from the highest point of the day, but despite that, 1.3% higher for the day. Ireda, on the back of their fundraising plans, was up 1%. Nestle, on the back of price hikes announcement, was also gaining in trade today. But all in all, muted day on for Indian markets after the carnage that we saw yesterday. Nifty ending near that 22,550 odd mark.